A very good morning, friend. This is Colonel Ajay, CEO Ajayastromoneyguru, first global astrofinance digital channel. Friends, today is a very special show. We are inviting Mr. Tushar Jain for talking about the global economy and the continuous crisis is being seen not only in US but also in Europe. One after other, the banks are being shown the bad performance and the insolvency and other things are being seen so far on the card. So we shall be discussing today with Mr. Tushar what kind of market is and what is, if we'll compare last 1 year, what is it supposed to be and what is expected next 1 year or so, or this is this the time for or opportunity to invest in, or not, then how much we need to wait. So this is a very important question. We shall be talking with Mr. Tushar. So Mr. Tushar, you're very warm welcome. And you said previous week Friday about the fall in bank in Nifty, or the exactly bank Nifty has seen vertical fall during current week. So I must congratulate you for your wonderful advanced analysis. So very warm welcome to you.
Thank you very much.
So, Mr. Tushar, let's come to the straight point. Then, what kind of the market currently in? Because this is very straight question. So, what is your views? How the financial market is behaving? What is your views on the current market?
So the financial markets and especially the equity markets, if we see, they are in a very sideways uh, trend. If we see for the year-on-year basis, then we can see if we, uh, that Nifty is it is at nowhere after 1 year. So at the same date in 2022, on 17th March 2022, the Nifty was somewhere around 17,200, and today, as we can see, it is at the level of 17,000. So after complete 1 year, the market is nowhere, and the market haven't given any big returns, and in fact haven't given any return if we see the year on year basis. So for the long term investors, they are quite very unhappy, and with the especially equities markets, and this is a time when the traders are earning or losing money, and the investors are neither earning anything nor losing anything. They are but they are losing the time value of their money. So markets are very consolidating from last 1 year.
Okay, fine. So you mean to say, it's a very rightly said by Mr. Tushar Jain. He has given a very interesting statistics that Nifty on 17th of March year 2022 and Nifty year 23. So it is, if you will compare, so both Nifty, so between March the 17th 22, it was 17,200 plus, and right now it is around 17,000. So around the 200-point difference it is there. So far with the traders, they have enjoyed good amount of the profit. If we see the year 2022 low and high, but so far with the investors, they are disappointed. Very rightly said, Mr. Tushar. So now very straight question, because since the banking sector are under problem, and US and Europe are leading financial sectors industry, they are into the trouble. So if we just go back in year 2008, when whole financial sector was under great trouble, so is there any what is the similarity between year 2008 or 2023? Is it the beginning of the financial crisis of the industry, or there's something different? So they're very straight question, because whenever the financial institutions or banks come on the defaulter list, because it is properly said that the check bounces, but now the it is not check, it is the bank bouncing. So is there any similarities between 2008 crisis or 2023? It is the beginning, or what is your view? Very straight question to you, Mr. Tushar.
So in at the time of 2008 crisis, the crisis was because the whole financial sector has been collapsed and was facing issues. And if we compare it with the current scenario, only few banks are facing some problem, and that problem is also not because of any scam or overvaluation of any instruments or bonds or real estate or equities, but because of some liquidity issue. Because from last, if we see 1 or 2 year, the economic conditions of many major economies of the world were not very good. The inflation is continuously going high. The interest rates are continuously going high. Therefore, the liquidity problem around the globe have emerged, and the depositors of certain banks are now and now the corporates are using their the savings to operate further in the from last many months. Therefore, the new deposits are continuously reducing, and the current deposits are continuously they are also reducing. So the liquidity issue is there, but not a major scam or the overvaluation of the bonds or any real estates or equities are there. Therefore, there is a big difference between 2008 crisis and the current issues faced by a few banks. And also, if we look at Silicon Valley Bank, then we can see that it is the bank whose majority of the depositors are the tech companies, and the startups around the globe are facing liquidity issue. Therefore, they are withdrawing their money and their savings from the banks. Therefore, the liquidity issue has been there. But also, if we see the Credit Suisse scenario, which is not new and which is not sudden, the Credit Suisse is facing its problem from many months, and uh, but yesterday the Saudi Arabia bank has declined to invest further in the Credit Suisse because of the regulatory issue that the Saudi Arabia bank cannot have stake more than 10% in a certain company or or in an institution in a foreign institution. Therefore, yesterday it had fallen more than 30%, in fact 30 to 31%. And now also the difference is during 2008 crisis, the crisis erupted all of a sudden, but now slowly and gradually the banks are coming up, and the central banks of the respective countries are also coming up to secure the funds of the depositors. As we can see in the case of Silicon Valley, the federal government and the federal bank is have come up to rescue the Silicon Valley bank. And in case of Credit Suisse, the central bank of Switzerland have come up with the relief package for the Credit Suisse, and they have issued a statement that they will help Credit Suisse to for the further investments and further liquidity. So there is a major difference, but the point of concern is we cannot ignore these news flows and these parameters. We have to be cautious.
We have to be the cautious since problem is not yet clearly solved. This is what exactly Mr. Tushar says. Now, very straight question to you, Mr. Tushar: is this banking storm is just over or just passed, or still something is left? Very straight question to you.
So according to me, I don't think it has completely passed until the liquidity issue around the globe is there, until the continuous rate hikes around the globe is taking place, and continuous inflation is going high. Unless these three parameters have not been solved, the banking issues will definitely will be there in the globe, and we cannot uh, run away from these issues.
So now my next very straight question connected to the banking industry. So is any rough time period when this problem can be solved, or the problem could be somewhat come under control at the global level? What is your views on this? I mean, any specific period or any this thing it is supposed to be from your views?
So for the as far as current scenario is concerned, I don't think it will last long. And since the central banks of different countries are coming up with their measures and their, they are supporting banks, therefore, maybe around 2 3 more days, and we can see some recovery and some positive news flows coming up from the different part of the globe in terms of banking sector.
So a very positive views is being shared by Mr. Tushar Jain. He said a very positive. So far, any positive news is expected next very few days, maybe 1 week or maybe 2 weeks. So this is the breaking news so far, that we should not be disappointed by looking at the Europe or America or their banking sectors. Our banking sector is comparatively much better. We'll talk on this issue also a little later. But there's a good news that Tushar Jain has said that you need not to worry much and should not to be a panic so far. But you need to be the cautious. That exactly what Mr. Tushar said. So very next question to you, Mr. Tushar. What is the so-called? What do you think about the fixed income instruments? Are normally every investor is looking at the fixed income instrument whenever some uncertainty, geopolitical tension, or any kind of the uncertainty prevails. So what is your views on the fixed income instrument so far? Maybe the bonds or fixed. What is your view on this?
So around the globe, especially the fixed income instruments are under a very attractive, are giving very attractive yields and mouth-watering yields. If we see India, Indian FDs are giving more than 7% return, and in fact, certain bonds and in fact good rating bonds, if we see, they are some of them are giving 8%, 9% return, and also. Other countries, if we see in US also, the bonds are giving 5%, 6%, even 7% yields. And if we see the real estate trust also in US, they are giving 9%, 11%, and even 12%, which is quite attractive as far as if we see more than 1 year perspective. And as we have discussed earlier also, if we compare it with the equities, the especially Indian markets, the market, although moved on very north and south, but at the end of the year to year, if we see, then the movement was nowhere. Comparing to the fixed income group, fixed income instruments, they are giving good mouth-watering yields. So we can definitely consider them as far as the present yields and return they are giving.
So Mr. Tushar Jain said very straight away that fixed income instruments cannot be ignored under current situations, and since the keeping in view of the attractive bonds yield or FDs and all, so of course you can consider some. So now we have discussed about the financial sector's health. We have discussed about the banking sector health, and what we have seen so far with the Nifty movement last almost 1 year or so. In totality, what an investor should do, anybody willing to invest money, what exactly an investor should do, or if we be very specific, what a trader can do now, or what investor can do now? A very straight and question to you, Mr. Tushar.
So for the investors, small investors and investors, since investors are considered for the long term, then they should definitely go for the fixed income instruments along with gold also. If we see the gold prices, in during the same period in March 2022, the gold prices were somewhere at around 52,000, and now they have crossed the 58,000. So a 6,000 rupees gain in one calendar year, and which comes up by around if we see around 7 to 8%. The gold is also giving good returns, and in fact, not 7 to 8%, more than around 10%. Gold is a good option, and fixed income instruments like FDs and bonds are good options. Also, the real estate also have given good amount of return in past 1 and 2 years. And so a major part should be this, and equities also. And for the traders point of view, if we see, as we have already discussed about the Nifty on a year-to-year basis, but if we see the fluctuations of Nifty during the year, then we can see that it made low at the level of 15,200 and made high at the level of 18,900. So a swing of 24% is has been seen in Nifty during the year. So the traders who accumulate good stocks and who trade according to the for the short term prospect, for the medium term perspective, they are earning good returns in equity market also. So for the equities perspective, we can consider medium term investment, and for the long term investment, we can consider bonds, golds, and real estate.
So the message is very clear. If you are long-term investors, the gold and bonds are really, it is the safe investment to be considered. But if you are a medium-term investor, or then you can consider a good amount of for equity also, because the Nifty has seen 18,900 from 15,000 to 18,900. It was something like that. And after having reached at the 18,900, the Nifty is around 17,000. So that correction should be taken an opportunity to invest in good quality stocks if you are an investor for the mid-term. So therefore, the message, I hope the very message is very clear. I will conclude at the end of the show. Then Tushar is very much optimistic so far with the banking industries are concerned. He has said very clearly that banking crisis of 2008 or financial sector crisis 2008, which was the one of the major cause for the recession of 2008 and 9, it cannot be compared with the current banking sector storm, whether it is US or Europe, because the similarities are not there. The banking are not under any kind of the scam or a fraud. It was the liquidity crunch, which is the one of the major point for. And of course, last 2 years, that whole of the global economy has faced the COVID-19 setback. So it will take time to get established. So it's a very important point what Tushar has said. Now, number two, what he has said. So the other assets class, fixed income or instruments like bonds, they are giving a very attractive returns. And so far with the gold, it is also within 1 year, the gold has given more than 10% return in the gold investment. So almost in totality, every corner of or all kind of the different branches of the investment had not disappointed investors. If we compare with the equity from the low to high, it was 24% return was given in year 2022. As gold, it is also giving more than 10 or 11% good return. Bonds also giving. So this is also an important thing. Time to enter or time to exit. It is very clear message. Then you should not be. You should not panic. This is an opportunity, a rather golden opportunity to invest on the right time at the right place. Thank you very much, Mr. Tushar, for being with us and giving the very valuable suggestion to our viewers. Thank you very much, and looking forward many more such interviews to educate our viewers. Thank you very much. So friends, so this was Mr. Tushar Jain who had given a clear hint about the global economy or financial sector. I hope all of you must have been enjoyed. So please don't forget to give your comment in comment box. All the very best. Good luck. Happy trading.